Thank you and welcome into this video. I would like to take you through how you can file for your income tax return in case you are a Kenyan who is earning foreign income or income from abroad. What you're supposed to do, you are required by the Revenue Authority to declare your income by 30th June of the subsequent year, which how we usually file our return for the previous year. So you are required by the law to declare the income which you earn like any other person who is employed in Kenya. So as a resident individual, you usually declare this as a sole proprietorship business, and that is how you can be able to declare this income. But I would like to give you a step-by-step guide on what you are required to do. Basically, what you need to do, just get into the iTax portal as we usually do. Then enter your iTax PIN. So just enter my TIN number here, 43007A. Then you need to hit continue. Then you need to ensure you have populated the right TIN, the password, and then you need to do a simple mathematical computation here, which is giving me a value of 95. Then you need to sign in. Then you need to come to where we have return and then choose file return. So in this case, you are a resident individual, so just come here and choose the income tax resident individual. Then you need to click next. So just click here. So in your case, since I am assuming you have not filed for the first time, you have not filed you have not filed again. So in your case, the type of return will be original, and you need to enter the return period from 1st January 2025 to 31st December 2025. But I need to clarify on this. You need to note that when doing these, you can use the auto-populated income tax return in case you are using eTIMS validated invoice, or your invoices which you are billing your customer with were fiscalized using eTIMS. But in a scenario where these invoices were not fiscalized using eTIMS, the data of the transaction which you had done will not be auto-populated. So in most scenarios, because you already have your invoices, and assuming you already have the expenses which you incurred when generating this foreign income, I would recommend we use the traditional Excel format. So just come here and choose the Excel method, which is here. So it will just download this Excel sheet here. So when we download this Excel sheet here, we shall get it at our download in the file explorer. So what I would recommend, I can first eliminate these two documents here for simplicity, because though they are non-resident one, but I will just eliminate them for simplicity so that you don't get confused. From there, what you need to do, just come above this Excel sheet, click above it. After clicking above it, come to where we have properties, then come to where we have unblock, click apply and click OK. Then what we need to do, we need to extract the content in this document. And how we do that, you need to click above that document. And when you click above this document, you need to choose extract all. And then you need to click extract. So when you do this, basically, you are avoiding some macros blockage when opening this document. More so when you are dealing with the Excel sheet, you get into troubles when you try to open this document without dealing with macros. Then just click above this document and then come to where we have open with. Choose open with Excel. So when you do that, just enable content edit. From there now, what you do, you basically get into this sheet, which technically is more or less the same with the one which you do when you have the formal employment income. Then you need to enter your TIN number. So I just populate my TIN number here, A015 43007A. Then you need to enter the return type. So the return type is original. Then you need to enter the return period. So the return period technically dates back from 1st January 2025 to 31st December 2025. Then you need to enter if you have any other income rather than employment income in this scenario. So in this scenario, you need to come here because you don't have employment income. You need to populate this sheet. This is the sheet which we require. So the sheet which you deal with in this scenario is the profit and loss account and the balance sheet account. So under the P&L, what you need to do, you need to enter the gross income which you generated from your business, which is technically income which you earn from foreign country. So that income might be, in most cases, usually occur from service industry. So the service trade, maybe you offer some consulting IT services to the outside country or any consulting services. So I usually recommend you populate them under the commission. So as you know, in case you earned this income from the foreign country, in most cases it will be in foreign currency, and you need to convert this income into the domestic currency, which is Kenyan shilling. So in order to do that, you can either use the average method of the exchange rate, or technically you can use the spot exchange rate at the time when you are receiving that income. But in most cases, in case it was originating, it was in USD, and maybe you are not careful and you did not capture the spot interest date for different months, maybe from January to December, you can take the gross amount in USD and then multiply it using the CBK average in exchange rate, which is technically available. Like for 2025 is allowed 129.5 something 0.50, and then you multiply your income. So we can assume maybe in the past income you made a gross transaction of around $5,000. So $5,000 is a amount to, so we can get into my calculator. You can assume that you earned $5,000, because when you are reporting to the KRA, you need to convert this amount from USD to Kenyan shillings, because when you report in USD, you'll be understating your income, and there'll be miscommunication between you and the iTax. So you need to take, it is 129.50. That is what I'm assuming is the average rate this year. So you shall get that the amount which I'm supposed to declare is amount of 647,500 is 647,500. Then I need to come and technically populate this amount here. Then you notice that in the new KRA regulation, as per 1st January 2026, in order to be able to deduct expenses into this figure, the amount of expenses which I'll be deducting here, all these expenses which I'm given here, in order to be allowed to validate these, to deduct these expenses from this gross turnover which I had made in section 1.2, because this is the section we are assuming we are selling non-stock item, which is services. For any expense which I am to deduct here, it must be validated via e-teams or teams. But in case you kept good bookkeeping, in case they were not the expenses were not validated via e-teams, and you did good bookkeeping and you have some receipts, you can be able to claim this amount using something we call manual non-e-teams stroke teams expenses. So this is provided at the sheet T, under the T computation, which is here. So it is provided at this sheet at the point section 6. At the section 6 here, it's provided here. So you need to go to the G here, and you can be able to do the necessary deduction. So what do I mean by that? What I mean by that, you can be having some receipts or expenses or invoices which you are invoiced, maybe in case you are offering services, which is like house rent or office rent. Also, you incur some expenses, like in case you work in the tech industry, you bought some new laptop to boost your output. You also paid some people to help you in the work. So in order to do that, and you have all that data, what you need to do, you need to get into the iTax portal, and then come to where we have return, and then come to where we have income tax return adjustments, and come to where we have manual and non-e-teams stroke teams invoices. Then you need to choose the return period which you want to do the adjustment for, that is the income period 2025, then you need to click next and then click OK. Then you need to download these comma saved values, which is the CSV values, which will be downloaded here. So after, when you open this document, this you can open with WPS. Don't tamper with the headers. So what you need to do, you need to populate the supplier TIN, the supplier name. So when we have the supplier TIN, is the TIN which usually in every receipt, even if it is the receipt which you receive from the supermarket or from the computer seller or the electronic shop, you need to enter the name of the supplier, the invoice number, the invoice date, the supplier description, and the amount. So populate all the receipts which you have here. And after populating all the receipts here, you just need to come here, save these details. So they'll be saved as comma saved values with comma delimiters. Then click save. Don't save as Excel or XLXX. Just click save here. And then after doing that, get to the iTax portal. Just come and choose these. Come at the download. Just choose these CSV file which you have filled with all the details of your receipt, and then you need to come here and choose the invoice which will act as supportive document here. So just come here and select the invoices which will act as supportive document here, and after doing that, you need to click submit. So when you submit, now you can be able to come here and deduct the expenses or the expenses which you have. Maybe the expense from those receipts technically add up to around, let's say around, technically maybe we say we get a receipt averaging to allowed for 50,000, so that you can be able to deduct the expenses, because this year is a bit tricky. So you get that the profit which you made is 187,000, and the tax which you are required to pay in this scenario is 0, but in this scenario, you are not accorded the annual personal relief since this did not come from formal employment. So the annual personal relief is 0. So you are not eligible for the annual personal relief. So I'll just input value 0. So from there, the amount of tax which I'm required to pay is amount of 19,750. From there, you need to get here where we have P&L sheet, which is here, profit and loss account. What I need to populate, some details here. Under the P&L. As you know from basic accounting, the asset and liability must equal each other. So at the other asset, I'll just populate value 1. And at the other liabilities or other loans, I need to populate value 1. And as you can see, we need to balance the asset and liability side. And because I know it is technically sometimes hard to validate your expenses and your liabilities and assets, that's why I usually recommend you use value 1, since when doing the annual declaration of your income, what you are trying to report to the KRA is your operating income and your operating expense, not your financial position. So from there, you need to come here, and then in case you are accorded any reliefs, you can come and deduct them here. In case your income was subject to reliefs, which was maybe not relief, in case we were paying some withholding tax, and that withholding tax which you had paid for that income acted as in case this income was subject to withholding tax at a rate of 5%. So you can come and deduct the withholding tax credit from this section. But in my case, I didn't have. It was not subject to withholding tax. So what you need to do, in case you are good with what you have populated, you have declared your income properly, you need to click validate. So when you are validating, in case you have any query regarding foreign income and how you can be able to claim for you are working for a country which have an official agreement with Kenya regarding the double taxation agreement, which is DTA, you can kindly reach me so that we can be able to offer that relief. So that is where the income is usually done, the taxation from the source. More so, income from these digital services is usually deducted from the so small. So in a country like United States of America, you get them deducting the tax at the source. And in case you have any query regarding that, you can reach me using the contact in the description, or using my email. We can have conversation regarding that. So basically, the Excel sheet already downloaded. I just click yes. So you need to check the date. The date is today's date, which is 11th of May 2026. Then I just click OK. Then from there, I need to get back into the server, and then I need to come to where we have return, and then choose file return, and then come to where we have the tax obligation. I'll just choose the income tax resident individual, and then I'll just click next. Then I need to you need to enter the return period, which is this. Then you need to come here, and you need to populate to upload the Excel sheet here, the auto-populated ITR sheet here, which have been saved as the document. Then you are being asked if you have any other income, rather than, we need to confirm we have input the right sheet here. You are being asked if you have any other income other than employment income. In my case, if you own rental property, in my case, no. Then you will need to agree with the terms and then submit. So this was just a demo video, and that is the procedure which you'll be using in case you have foreign income. In case of any query, you can get me through my contact in the description for more information and consulting services regarding income tax, ITINS compliance, and also how you can become tax compliant and avoid problem with the revenue authority. So thank you for watching, and have a nice day ahead.